Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Well, there's very little to comment on today's session because it was a very muted session and we only had a little bit of a change towards the end with a late spike. So you can see that pretty much we're trading the same place that we were trading Monday, and as the market awaits for the main risk event of the week in the form of the FOMC tomorrow. No change on the larger time frame. We trade within last week's range, and on the daily you can see that this balancing, short-term balancing that we saw Thursday and Friday now has been extended lower, and we have kind of a 4-day balancing range above this in short-term balance that we broke from, and kind of above the 3,000 level. Now, if I take a step back and we see the structure and the references in vicinity, I mean, tomorrow it doesn't really matter what the FOMC does. What matters is how the market will react, and I see two ways this can happen. If the market likes or accepts in a positive way whatever the FOMC is going to do or say, new all-time highs should be made. That's number one. On the contrary, if the market gets disappointed, the likelihood is that we trade back inside this blue box that we have over here, which is the previous balancing range, and that will constitute a failed break. And notice that it will be a failed break of this 92, 91 area, and at the same time we couldn't reach the all-time high. So the likelihood is that the market is going to attack this gap that we have at 29.60 or so. So those are the two main, let's say, possibilities. In between, I don't think the odds are good to stay in between because the balancing areas are very narrow. So I think the likelihood is that either we break to the upside with positive, with the market taking a positive stance from the FOMC, or we break lower and we attack this gap. Those are the two main scenarios that I'm calling for tomorrow. Now, when we look at the market profile, you see a very muted session, back and forth, mostly within the value area from Monday, and the low was made early morning on the A period, B period inside, C period could not take the A high, then you had a little bit of a flush, then you went back down, and then there was a little bit of a news on the I period when President Trump tweeted that some positive aspects of the China trade talks, but that was not enough for the market to break back inside the Thursday Friday range. Now you could see that higher lows were made through the session and higher highs, so you could argue that there was a little bit of a long positioning, and that's probably what caused this late spike. Now, late spikes, what we do with late spikes is that because the market doesn't have time to validate or reject, because basically this happened just before 3 p.m. and this is just 15 minutes of trading. You don't know if this area will be rejected or not. So that actually is the focus, the immediate focus for tomorrow. We take the spike, basically the M period. If we trade within or above the M period, we validate the spike, and that should improve the odds for further upside. And notice that further upside, that means that we will be inside Thursday and Friday range. On the contrary, if you get acceptance below the M low, that will be a rejection, and then the likelihood that will increase the odds that we're going for this incomplete auction that we had on Monday with no excess at the low. And remember that we have the 29.91.50 level, which is the previous range top. Again, probably the market's going to be a little bit muted in the morning. Liquidity could be low, probably is going to be low. So my suggestion is wait for the risk event and see how the market reacts. As I said, if the market reaction is positive, I think the likelihood is good that we will take the all-time highs. If that happens, there will be plenty of opportunity to get in. There are many references that you can use. At the same time, if the market rejects or gets disappointed, there will be plenty of opportunity to get in. I mean, being at the near the all-time highs create a lot of risk, but also creates a lot of opportunity, because if the reaction is negative, you have a lot of downside potential. If at the all-time high you surprise the market in a positive way, well, there's nothing above this to stop this market, and whoever thinks or is positioned short will have to bail, and the potential is also high. So I think the best way to approach this is manage risk tightly ahead of the event and wait to see the market reaction. As we always say, odds are just odds, anything can happen. So be wise, keep your powder dry ahead of the risk event.